Alexis from Atlendis coming up. Very happy to welcome a decentralized application. Atlendis, your core business started as a lending desk, right? That was the core thing, but you have expanded to more today. So yeah,
Yes.
tell us more about it.
Hi everyone. So we're initially a private credit marketplace, decentralized, and so we're allowing real-world businesses, primarily um, trade finance companies and payment companies, to access fundings on-chain using stablecoins. And in order to do so, since those companies are Web2 companies, we built a second product, which is an on and off ramp solution, on-chain custody, and that does on-chain custody and does on-chain transactions. That's where also we use you guys for. And it basically allows to on-ramp and their repayments and off-ramp their loans in the most capital efficient way. Because obviously at the end of the day, those companies, they're using euros and dollars. So we need to convert those USDCs, USDTs in dollars or euros. And so we're also very much looking forward having euro stablecoins, because that's a very big missing brick that would make our business much more efficient.
So you just got a registration from the French AMF, the market regulators here in France. That was last summer, correct?
Correct.
Yeah, and so like I'm not aware. Let me know, but I'm not aware of any DeFi marketplace, DeFi lending desk that has that level of regulation. Like how does it help you?
So you really have like two different distinct entities. So you have the protocol, which really is the tech that is on chain, on which you have underwriters that are proposing loans and underwriting different Web2 companies, and you have the whole on-chain structuration, which is happening there, paired up with an off-chain structuration that we spin up in Delaware in the US.
Okay.
And then you have like the second entity, which we call Atlendis Flow. So you have Atlendis Credit, the platform, and then you have Flow, which is the registered entity, completely separated from the credit platform, that does service for credit. And so in order to offer those funds.
Very cool. 2023 again. We know it was a hard year, especially for. I mean, I don't know, especially for DeFi, but I would imagine it was hard. How did you manage to survive?
It was a tough year. It was a very tough year because, especially for us, as we launched in 2021, we launched on the high premises, and we looked at Aave in the beginning, and we thought, okay, what's the use of Aave? The only answer that we found was leverage trading. And so at the time, it was not really much you could do about leverage trading and trading. So all of the people that were detractors were also mostly saying that DeFi was purely volatile and only speculative, and there was no real use cases. And the DeFi was lending to DeFi thing. So we thought, okay, well, we could actually use a kind of structure like as a lending desk, but instead of lending over collateralized, you could lower that collateral basically to zero, and then have other kind of collateral to put in place and lend to companies. So that's other companies that did that at the same time. We all launched, and then we started to lend to Web3 businesses, and then FTX and 3 hours happened, crashed. There was a lot of contentions. We all realized at the same time how immature the market was. And that went not very well for most of the ecosystem. We we built in a bit more safe approach than the rest, which allows us to suffer no default at all. But that limited the traction drastically. So that forced us to pivot. And so that's why, like, instead of targeting Web3 companies, we said, okay, we have the tech. What can we actually put in front that would allow Web3 LPs to actually say, okay, I'm willing to actually deposit in that financial product. And so that's where we said, okay, well, we're going to go and see fintech companies because those companies, they are uncorrelated to Web3 markets. So, and that's something that in Web3 markets today is something attractive, right? Because as an LP and an investor, you always want to diversify your holdings. And so having a product which is decentralized from crypto in crypto is something which is very rare, actually. At the same time, having something which is high yield, because we're in the 10 to 20% yield, native yield, you don't have like utility token rewards on top or whatever, which is sustainable, is also something that investors have been very much looking forward to.
Is liquidity back?
It's coming back, yeah, for sure. So we're about to launch a good product next week. So we have already quite a lot of liquidity pledged to that, and it's definitely coming back.
So thank you very much. In terms of liquidity, what would be the best approach for a financial institution willing to partner with you, for example?
There are multiple ways, right? So either you could partner with us and on the liquid, so you have like the inventory and the buy side. So on the buy side, either like pledge capital. So either by referring or opportunities in your to your investors, or natively integrate our solution. Other than that, you could also come on the buy side, on the inventory side, and propose that if you have inventory, you can streamline your inventory directly through the marketplace and meet investors.
Is there any? I know it's a very rough space to be in when it comes to the fees, right? On these platforms, like how do you approach fees? How is that? How do you manage that? And how do you decrease them as much as possible?
Actually, it's not really a challenge because the competition in the traditional finance is private credit funds, and private credit funds, when they make a loan to a Web2 companies, they usually take 5 to 6% on the loan. So whenever like you start to learn, then 5 to 10 million, when you take 5 to 6%, I mean, you can decrease those fees, especially as we like digitalize a lot of the process. It's easy to decrease this amount and still be quite profitable.
What is how does your space look like this year, next year? Like how do you view the big next steps for DeFi lending?
I mean, it's growing. It's really growing. And every year we were missing some bricks to make because I know credit is not really like the first thing you would start building on right from the get-go when things are not like entirely mature, but we did anyway. And now we have like more basic layers that are more and more robust, more and more battle tested, and so it's easier for us to sell. It's we have like I said, like today, for instance, we're still missing euro stablecoins. I mean, real liquid and with high volume stablecoins, and it's coming. So we have the numbers of players that launched the stablecoins, and so we're very, very much looking forward being able to use them, and so. I mean, I think at the end of the day, it's only driving adoption, and it's going to make our business more efficient and easier to sell to big institutions, which at the same time are also getting more interest in the tech and in the overall ecosystem. So like everyone said before, building in a private blockchain was a blocker a few years ago. Today, I think it's even like a positive net gain. So yeah, I'm very bullish on that.
Cool. Thank you very much, Alexis. It was a pleasure.